landscape for you there. All right, guys. Ezron, I don't know where my money goes. Ezron, will tell you how to figure out where your money goes, how to manage your money in and out of your pocket. I don't know, guys, if you are able to change your device name, because I like calling out people's name, and I'm not sure I can call in 1KK0SSQG. Do us all a favor and just put your actual name on it, so that we can call your name out. Then Eunice wants to manage debt. I have purpose to make the appropriate step after this workshop. Awesome, awesome. That's all fantastic. We are slowly increasing in number, and I think we can get started. It's 10 minutes into it, we can get started. The rest will find us as we go along. So allow me to share my screen so that we can get this show on the road. All right, so welcome to the workshop. Today, we're going to be talking about how to become the CFO of your own life. And we're going to be understanding what the CFO does. And we're going to be looking at how we can mimic this role and have it play a role in our personal life. We're going to learn a few things that you can put in place so that you can start running your life like an enterprise. More so, not only your life, but also your finances, because that's the main goal. That's our main goal today. We want to give you the knowledge and the know-how so that your finances don't look the same. We're going to not only give you the information for now, but you're also going to get the tools, some tools that we're going to offer you, some free, some paid, and all this content is going to be available for you after our session. All right. So I want to remind you guys as well that we do have a giveaway going on, but in order to participate in this giveaway, you need to send us a photo of yourself. Do you see how this guy looks like on his table with his laptop open? Well, it doesn't have to be a laptop. You could be on your phone or whatever machine you're using to join us. We'd really love to see you guys engaging with the workshop, engaging with the content that we've prepared for you. So you can take a photo of yourself. Make sure we can see you first of all, and we can see the content that you're engaging with. If we can see the workbook, any of the workbooks we shared, that would be an added advantage. And if you participate in this, what you stand to win is a one-on-one coaching sessions. I love webinars, I love workshops, I love online events, group events like this. But the truth of the matter is that you will not be able to deal with 100% your personal situation. So one-on-one coaching sessions are great so that even after this session, we can have another one after that we can now talk about your own personal individual situation that you'd like help with. And so if you send us a photo, you can win that. You can also win a Pesa Planner from Pesa Savvy and a TKO Consultancy Camper, which is a journal, a financial journal, as well as a piggy bank that you can use afterwards. So because these are the resources. In addition to the information we're going to share, you need to now take some of these things and make it practical. And so we're going to give you the resources to do that. All you have to do is send us a photo of yourself, engaging with the workshop, or writing your notes, anything, whatever it is you'll be doing, and then 6 people stand a chance of winning all this wonderful stuff. If I were you, I would get on that very fast. Proper introduction, my name is Juliet Odhiambo. I am the founder of Pesa Savvy. I am your co-host, co-moderator. I'll be doing this with TK, who's going to come in a bit later on, and he's going to take another session of our workshop. I do have a BCom in finance and a master's in development studies. I did my CPAs, which is in accounting. For those who are not clear, I am a 2018 Mandela Washington Fellow. Over the course of my work, I have worked with different organizations over the course of my career. I started in audit and commercial banking, and I was trained also in the Kellogg School of Management. And over the course of my coaching career, I have been able to reach over 1,000 people with financial literacy skills and tools that they can use for their lives. So module 1, which is really the core and the heart of all of these things, all the information we're going to offer you after this will not make a lot of sense if you don't have the right mindset around your money. Unless you think about your money a certain way, you might not be able to use the tools that we're going to offer. Even the information we're going to give you after this might not be useful for you if you don't have the right mindset about your money. And so when we talk about the CFO mindset, which is the first module that I'm going to take you through, that's what we're trying to do. So start thinking about how you view money, what you think about money, how you understand your own money, and then move on from there. So our agenda for the day is our agenda for the day is, for me, for this first module, is what is the CFO mindset? What we're going to ask that question. And then what are the roles and the responsibilities of a CFO? How then, once we've understood the roles and the responsibilities, then we ask the question, how then do you become the CFO of your own life? After that, then we're going to also walk you through how to close your financial year. Because if you work for any company, you know that there's a process that through which at the end of their financial year, they have to close it. And so what does that mean and what would that look like for you? And then we are going to also look at how to prepare for the new year. We are just about to go into 2022, and there's many things you can start doing right now to get yourself in the right mental space to you, or in order to achieve some of the things that you have in mind for your finances, for your money, right? So who is a CFO? A CFO, when you're thinking about this, it's a CFO role. It's one of those major roles in any companies. So when you have the C-suite is all those people whose job titles start with the C. So including the CFO, the CEO, the COO, all those people. So specifically the CFO's role, we need to understand how does this role what is the speciality of this particular role? How does it fit with the greater plan of an enterprise? And how do we learn what that person does in order to mimic it? So the CFO duties include really mainly understanding the cash flow of any company, making sure that there's a financial plan for that company, making sure that the company is able to know what it is strong at, where it is running weak, and then put corrective action, especially when it comes to the finances. The CFO, it's kind of like some people call them the treasurer or finance controller or controller, because their main role is really the managing of the money, the finances. And then within the CFO, you'll find the finance line and the accounting line. And both of them are important for any company. So we're going to see the difference between finance and the difference between finance and accounting, and how to use both of them in your own life. We're not getting technical. We're just trying to help you understand the mindset that you need to have and see how you, even if it's in 5%, even if you can take 5% of the mindset of the CFO and implement in your own life, that could have a huge difference. It could make a huge difference in how you deal with your own finances. So what are the roles and the responsibilities of the CFO? We've talked about the general position. So the roles are many, but I'm going to talk about these three main ones, so that we can start thinking about yourself in terms of the three main things that you want to start to incorporate in your life and in your finances in order for it to look the way a CFO role looks like. So CFOs, they manage the process of financial forecasting and budgets and overseeing the preparation of all financial reporting of any given company. So they don't just look at the now, this is where we are now, but they also look at the future. When we are talking about forecasting, we are trying to look at how stable is this company financially in order to survive the next 5 years, to survive the next 6 years, to survive the next 7 years. So they want to put their company in a situation where it's going to be there for the long haul. And then secondly, they advise the long-term business and financial planning. So when it comes to financial planning, they're looking at the financial strength of that particular company, but also they're looking at the financial, like they're looking at the business plan, because if the business is not doing well, the finances are not doing well. And so you cannot separate really the role of the finances with the role of the business development, because he's the one who's going to say, we probably need to do this here, and there, so that we have finances to make sure that the company actually stays longer. And then finally, they take on the financial data that the company has been creating and preparing over time, and then they use that data so that they can influence the decision-making of any company. So they use information like how much debt do we have, for example, how much expenses do we have, for example. And so when you hear decisions such like cost cutting, for example, those are decisions that the finance has probably trickled down from the finance team. Or even decisions such as allowances and bonuses, how much of that should we be able to do? Those are decisions that are heavily influenced by the CFO role. And so they use that financial data that they have, not just to sit on it, then you have to take that information and start making decisions and start taking certain decisions about the company in order to make a huge difference in the long haul for the same company. Now, I want us to think about how a company keeps its records. If you look at the pre-workshop workbook that we sent, in fact, I don't know how many of us were able to do it. I'd like to ask Benta if she can just put that poll out on the workshop. I'd like to know how many people were able to actually go through the worksheet that we sent, and if you're able to glean anything from it. Just do a quick yes or no. Quick yes or no if you're able to do it. Benta, let me know once you've been able to prompt the poll. You'll see a poll coming up on your screen, so that you let us know if you were able to look at that, because then it will help me figure out how to take the next session. I'd like us to have a look at a financial statement. Thank you, Leanna. Thank you. Great job, guys. Because that, if you're able to do that, that means that you're going to understand the next session that we are going to be talking about. So what I'm going to do is share a screen. I'm going to share a screen of an income statement of a particular company, and I'm going to share also their balance sheet. What I want you to start thinking about is what you think this company had, what kind of records you think this company had to keep in order to come up with such a well-defined document. So I'm just going to show you the kind of information they have in those sheets. And then in the comment section, in the chat session, just let me know what records you think they have to keep, so that they can create the document that I'm going to be sharing with you. I hope you can see it. So this is the income statement for a particular company called Joint Co. So we have several things that they have taken note of. So in the chat, just let me know what records do you think they had to keep in order to create this statement. I don't want you to think so much. So for example, if it is revenues, so revenues is one huge number, but they've even split it into further different kinds of revenues. So what record does the company need to keep in order to know the total revenue created, for example? So if you can think of that, just put it in the comment section. And then even it comes to costs, to the certain expenses that they have here, what record do you think they had to keep in order to create, to have this number that they put here? So under here we have, for example, selling and marketing expenses, and it has come to about 7.8 million. So what records do they have to keep continuously track in order to come up with the selling and marketing expenses, for example, or even to come up with the total income that the company has made? I'd love to hear that. This is just the income statement. In about 2 minutes, I'm going to show you the balance sheet, and then you can also tell me the same. What kind of records do you think the company was keeping in order to have these numbers? So I'll just give you 1 minute to look at these. It's extremely summarized. So there's a lot of things that went into the back end before they were able to come up with this number. So if you can think of any record that you think was kept, just let me know. 30 more seconds. All right, now we have the balance sheet. Just look at it and let me know what record do you think they needed to keep in order to know this is our cash and cash equivalent number, or this is the property that we have, or this is the tax that we have. What records do you think they needed to keep for that, as well as even the liabilities that they have down there, liabilities and stockholders' equity? If you're not a finance professional, don't worry about it. This is just to get you thinking. It's not about whether you understand what these numbers mean. It's to just get you thinking about your money in a certain way. So what record do you think they needed to keep in order to say this is the accounts payable? For example, accounts payable means that these are the people they owe, they need to pay money to, or even payroll liabilities. What records do you think they needed to keep? Invoices, petty cash, there's a lot of petty cash comments. Purchases and receipts, payments, bank statement, I love that. Supplier contracts, very true, bank statement, receipts and expense report, awesome. Thank you for these answers. These are fantastic, and we're going to start seeing why you need to know this, because it's going to play a role in you trying to mimic that role of a CFO in your own life. Thank you for the shares. Let me go back to my presentation so that we can see why that's important. All right, so we're going to come back to those records. Don't worry about it. What is an enterprise? What is an enterprise? All these questions are meant to help you. You could have that muted. All these records are supposed to help you to properly start thinking about your money. So quick one, if you can define, if you know what an enterprise is, please leave a comment. How would you describe what is an enterprise? How would you describe what an enterprise is? just a quick description of your of what an enterprise is. Give us a quick description there, or a definition. Business. That's actually the simplest way to think about it. Any firm or venture that expects a profit, it's a business. It's a business. A business. A business is the simplest way to think about what an enterprise is. And it's important so that when we say we want you to help you to think like an enterprise, act like an enterprise, and profit like an enterprise, then you want to understand what exactly is this enterprise, and why do I need to think like that? Why do I need to have that mindset? How is that mindset going to help me in what I'm trying to do? So, like many of you have said, an enterprise really it's for profit. You're trying to make a profit with an enterprise. This is in comparison with something that maybe you call an NGO or a not-for-profit. For an enterprise, the main thing there is making a profit. So normally, and that's why you have that word entrepreneur as well. Originally, it's a French word, but really we don't really need to know where it's coming from. The thing I want you to remember is that it is a profit-making thing. It's a profit-making machine. It's a profit-making institution, and it means you undertake something. And when you're undertaking something as an enterprise, your main goal there is profit. And there are many other things that they do. For example, and you'll see how this comes to play in your own life. They want to solve problems. Entrepreneurs are trying to solve problems. They're trying to exploit different ideas. They're trying to fill a gap. They're trying to bring in like a product with a cheaper price, for example. And they're also trying to become specialists in the knowledge that they have, and rather having people pay for the knowledge that they have. Yeah, so when you start thinking about an enterprise, why I want you to start thinking like that is, even you as an individual, you can become an enterprise of your own. You can start thinking about, how do I, as Juliet, make a profit out of my life? How do I ensure that my finances are making a profit, or are ending up in a profit? How do I ensure that my enterprise is resulting in an enterprise? How do I put structures in place such that at the end of the day, for example, today we're going to look at your year. At the end of the year, then I have made a profit as an individual. That you can look back and say, I did A, B, C, D, I got this income, I had to pay these expenses, but ultimately I had this amount of money as a profit, and it's my profit, it's my money. And so when you start thinking about your life as an enterprise, there are certain things you will start taking into consideration. Things like when I talked about like cutting expenses, which is one of the things that CFOs would suggest in order to manage the money. So you'd start thinking, if I cut my expenses, how much more profit am I going to make out of my own life? This is just thinking. It's not even, we have not even gotten into the nitty-gritties of it. It's just you trying to shift how you look at your money, not as something that is limited, but as something that can be increased. And there are certain strategies you can put in place to ensure that you're actually increasing the amount of money that you're having as an individual. And so those are the things we're just about to talk about, some of that. So when you think about an enterprise and yourself, what do you think that, and I've given one example, or rather, no, let me give a good one. For example, one of the things that enterprises do very well compared to individuals is negotiating. Negotiating whether it is the cost of a thing, what they're going to pay for it, or negotiating whether it is the price of a thing. And negotiating, they don't take just whatever amount they're given. They're always trying to consider this, if we pay this much money, how will it end up affecting our profit? And so that's why you have to start with a profit mindset. If I take this additional expense, what impact is it going to have on my profit? And so I want you to think about that mindset of an enterprise versus your own mindset, and specifically in the area of negotiating. Negotiating for the price you're going to pay for something, negotiating for your salary, for example, your income, negotiating for anything that really has to do with your finances. If you learn the skill of negotiating, you can increase your income and you can decrease your expenses. I had a client the other day, and we were talking about this particular aspect of her being able to think like an enterprise. So this was something that we are trying to develop in her. So one of the things I told her, because we are looking at her finances and we look at her expenses, and she has 3 children, all attending the same primary school, and she's paying individual school fees for all of them. And one of the things I suggested and we talked about is there a way she can negotiate how much school fees she's actually paying for her children? Because she has 3 children going to the same school. And this was a test we actually put in place. So we said, go to the school, go talk to the principal, and even try and make a case for yourself to reduce the amount of money that you're paying, because you're bringing a lot more people in that school, people in terms of their target customers. And so she actually took it upon herself to do it. And while the principal was wishy-washy about it, he directed her to go to the finance person of the school. And so they did some quick math for their children to see which kind of cost can be incorporated as one cost for the 3 children. And ultimately, by the time she was done, she was able to reduce her school fees to 20%. By 20%, she reduced her school fees expenses by 20%. And you see, this is something that would not have happened if she didn't try to negotiate the cost of her children's school fees. And ultimately, that 20% expense, we were able to take it up and have it used on something, another thing. We took 10% and redirected it to investment, and another 10% to another expense that she was struggling with. So when you learn to negotiate, you need to look at your money and your finances in totality, and then try and think about this area and this area and this area. Can I increase the income here? Can I reduce the income here? I mean, can I reduce the expense here? One of the ways now you can introduce now negotiating for increased income, especially if you're somebody who is employed, it means that you need to now start being able to make a case for the work that you're doing vis-a-vis what you're being paid. And so if you're able to make a good case for yourself, then you're able to have your salary increase at a certain point, because you have demonstrated the value that you bring to your organization. So having that in place, having that particular skill of negotiation, that is just one of them. That is just one mindset that you might want to incorporate in your finances, and see the impact that is going to have in the whole entire picture of what you have or what you have on the table. Like having a wholesome look at your finances and seeing the moving parts that you can have to make a difference in your finances. So when you're trying to become the CFO of your own life, you want to start thinking long term. If I said that word long term one more time, I don't know. That's one thing you need to remember, because CFOs think long term. They want the stability of a company long term. So you as yourself, you want your stability to be long term. What industry are you operating in? Like as a self-employed person, or even as someone who's employed, what industry are you operating on? How relevant are you now, and how relevant will you be in the long term? When you can figure that out, then it helps you to have like security of your income for the long term, so that you're not just thinking about how much money am I making right now, but rather, is this something that is sustainable 5 years, 10 years down the line? That can cause you to make certain shifts in your life, so that you secure yourself, you secure your own industry for the long term. The other thing is forecasting and budgeting. And forecasting, once again, that's looking into the future. You must learn to think beyond today. How will you fend for yourself many years from today? And so when you're thinking about even at the point at which your income stops coming in, or it reduces, the amount of income that you're making reduces significantly, then it means that you start thinking about putting structures in place such that your income is secure, whether or not you're actively working for it or it's coming to you passively. What you're trying to do is forecast, think about those costs, and think about how you can incorporate some of these things that we're talking about to ensure that you're able to fend for yourself. Then thirdly, use financial data and be strategic. I talked about how CFOs will take that information that they have, and then they will go and tell the other people in the C-suite that maybe we need to cut expenses in this particular area. Maybe we need to increase sales for this particular product, things like those. So when you strategize for your own financial growth, it means that you're not waiting for magic to happen. Some of us have such a magic mindset about our money, so we just want things to happen magically. But a lot of these things has to be planned intentionally and strategically. So you have to start thinking about your life and thinking about your future strategically. And the only way to do that is when you're able to look at the data that you have. So what that means is that you must have data to work with. You must have some information that you're using to plan for the future. And that will take us into our next session that TK is going to talk about your data. How are you going to collect this data and how are you going to use it? What data actually do you actually need in order to strategically plan for your future? Sorry. I do have another question for you. Great for you to write on the comment section. Why do you think companies close a financial year? Like we have 2020. Why do you think the companies need to go through this whole process of closing a financial year before 2021 comes in? Or sometimes it's in between 2 years. So you could find a company has their financial year starts in April and ends in March. But in March, they must close the financial year. Why do you think this is necessary for any company to do? A quick guess. To determine their, what did you say? To determine their financial position, regulation. Yes, I like that, regulation. Determine performance, current status of their finances, to check their profits and losses. All those are fantastic reasons. And you, for yourself, if they have investors, they need to know, yes, they need to know where the money goes, also to lure prospective investors to invest, assess their expense, thank you, track the expense, check the financial status. Those are all fantastic reasons, by the way, and many of them are the same reasons why you need to close your financial year. Number one, somebody said about regulation. Regulation means that there's government regulation that requires them to do it, right? And so, for example, if the regulation for you as an individual is the fact that you have to file your returns, and you can't file your returns if you haven't closed your year, you don't know what your money is bringing for you. Somebody also talked about investors. When you're the CFO of your own life, it means that you're the main shareholder in your life. And so for you to be able to know, I'm actually doing well, my financial year was actually good, you need to take some certain steps to determine what are you using to say that your financial year was okay. I just want to use your reasons again to assess where they have failed and where they are going. That's another reason why you would want to also close your own financial year. Income versus expenses, not quite clear. To know the health check of a company or a business, that's a good reason to do. And what we're going to talk about what we mean by closing. To check profitability and plan for the future, even for you. So as you write these things, try and think, how does this thing that I'm writing apply in my life? And how do I shift my mind such that even for me, I have good motivation to sit and analyze my finances and close it to determine that this is what I want to do or in the next year, or this is my financial status for 2020. And this is where I stand. Why? What would be my motivation as an individual to do that? And those answers, those responses that you're giving are perfect. You just need to take that response that you're giving and now put yourself in that situation. Who is my investor? Why do I need to demonstrate that I've made a profit? What is the regulation that requires me to have certain numbers in order? How do I use this? What do I want to do in the next year? And what numbers do I need to determine today in order to make those plans happen? So it's a mindset that can take a little bit of time to change, but can take with intentional, when you're intentional about it. So, so what do we mean by closing your financial year? We mean that you want to get certain numbers. You want to know your performance in key numbers. One of them is profit. And that's why we started by understanding what is an enterprise and that profit-making goal that they usually have. And so, if you're trying to determine whether or not you had a good year, then you want to close the year. You want to close your year and you want to ensure that you have the numbers that will prove that you actually had a good year. So how do you start? Where do you start? Start by preparing and analyzing your own financial statements. This is something that TK is going to walk you through in the next module so that you can start seeing, how do I prepare my own balance sheet? We looked at the joint corp balance sheet and we looked at how the numbers that they had. And so those statements, you can prepare a very simple one for yourself. If it's a balance sheet, you just want to know what do you owe, who do you owe, what do you own, and then I'll create a balance sheet for that. And then if it's an income and expense statement, then you only need to figure out how much money did I have coming in, how much money did I have going out for the year, and prepare an income statement for yourself. So TK will take you through that in the next session. Then the other thing you want to do to close your year is to collect and pay debt. Because when you're trying to determine the financial health of a company, it matters who owes them and whether these people who owe them are actually able to pay them back. And so as an individual, you also want to see who owes me if you lent it out, not if you gave. You know, when you give, you're giving for free, as God would have it. But if you lent out and there was an agreement of this is when I want to get back the money, then do the collection. And that can be an uncomfortable situation for a lot of people. But when you're starting to think about yourself like a CFO and you have that goal in mind, then these are things that you want to start paying attention to. And then the other thing is paying your own debt. Because now people, that means if you owe people, they can come for other things that belong to you. And you don't want people to come and disrupt your finances. So you want to preempt that. If you owe someone, pay them. If you don't pay them, have a plan for. If you don't have money to pay, have a plan for how you're going to pay them. Then the other thing you want to do is to reconcile your bank accounts and credit card account statements. So how many, just to do like a yes or no on the chat. If you open your bank statements, for example, every month they are sent to you, whether you open them or you just see them on email, bank statement has come. How many, tell me yes if you do and no if you don't. You open your bank statement when they come on email. Once in a while. So no. It's very tempting not to, because if you just take note of the email with thanks. You know those emails noted with thanks. But most of them are automated, so I'm not sure how you do that. But yeah, so one of the things you can choose to make as an annual routine of your money is to take all your incomes, all your statements for the year, and look at exactly how much money you had coming in, how much money you had going out, basically doing like a reconciliation. All of them, most of them should already have some reconciliation when they're looking at debits and credits. And also depending on the activity that you have on that account, that could be a very simple process, or it could be a very tedious process. So you might break that down into every quarter or every month so that you know this is what I have coming in and this makes sense. By reconciling, it means that you know why this came in and where it went. And sometimes you could have a cost even in your statement that you don't know it wasn't yours, especially for credit cards. You just see a payment has been made and you are not sure it was you who spent it. And if you don't do that reconciliation on a monthly basis, when you try to do it at the end of the year, you might struggle with that. This helps you to ensure that what you're paying for is actually what you have spent money on. And sometimes banks do make errors. I used to work in a bank, like I said. Banks do make errors. So you want to make sure that whatever is represented in the account is actually an expense that you had for yourself. Then you want to also get the necessary documents ready to file returns. We in Kenya, I'm not sure about other countries that are represented here. In Kenya, we file our returns in June. So by end of December, for the most part, especially if you're self-employed, you should have your numbers ready. And if you're employed, that means there's a document your employer is supposed to give you, the P9 or something, and you can try and get those documents ready so that you're not rushing to beat the deadline on at the end of June. This is something, if you're well planned, can get done in January, can get done even before February, and you forget about that. And then finally, the other thing you might want to do is to back up your information. So in addition to getting the statements and reconciling them, have a place where you just, even if it's a folder on your laptop or a file in your home, you know that you have these numbers, especially if they're very important documents. Put them in a safe place, put them somewhere that you can easily access them, and somewhere that you can also quickly make reference to those particular documents. Back them up in the event that you will need to make proof for certain things. Now, when we're talking about preparing for a financial year, the new year, how do you plan for your 2021? One of the things you want to do is to reassess your business. And business here, it's not because you're becoming your enterprise, yeah? So you are the business. So you're talking about your personal business, your industry, your individual industry. Reassess them and reassess the budgets. Reassess the budget that you have, reassess the goals that you have, reassess the strategies that you have. Strategies, especially when it comes to investment, those investment strategies can change over time. So the things that where you started might not be where you're going into the new year. So when you're assessing what worked in 2020, 2021, then when it comes to the new year, then you can say, because of A, B, and C, I think I'm going to change this and start doing ABCD. One of the things I did with a client of mine recently was to reassess the stock that she had invested in. And so we were looking at how did they perform and whether or not she needs to continue building her portfolio using these key stocks, because she had 3 key stocks she's using to invest. And so she needs to understand, do I need to keep them or should I dispose of them? And so we went through a conversation of, even if she disposes them, which direction should she take them? Yeah. So you need to take time to reassess your strategies, reassess your goals. Secondly, look for ways to consolidate or reduce ongoing expenses. So once you have an understanding of the money that you have coming in and what is going out, the new year is an opportunity to look at the expenses that you want to continue with and the ones that you want to let go of. Things like subscriptions, for example, some subscriptions that you're paying for might have served you in the past year, but are not going to serve you in the new year. So this is a time to look at all of your expenses and assess whether you want to keep them or whether you want to let go of them. And thirdly, you want to consider options for financing growth and expansion. So profit, like again, when you're thinking like a company, companies are always looking at which new markets can we enter. how can we grow our operations? How can we grow our profits? How can we grow our income? As an individual, you can now also start thinking of yourself like that. At the end of 2019, I had one income stream that wasn't even very giving me the returns that I wanted it to have. So after having a conversation with myself and with God, we decided as part of growth and expansion in the year 2020, we're going to start we're going to grow a business that we are starting at the end of the year. And so, like, even if it's in terms of you entering into business or you entering into another income stream or developing a certain skill that you have that you know once it's developed can have certain positive impact on your entire balance sheet. So this is the time to consider such things. And so one of the things that people always do, and I also encourage people to do, when they're working with me, we'll do your goals, we'll do the SMART goals, and we talked about that in the pre-workshop material, but we're also going to do a small exercise right now. So we did the what do you call them? The goals for the year, for your life. And then now every year, what you do is to sit with those goals and see whether they are still relevant and whether they are goals that you want to continue keeping. And so an exercise I want us to go through is really how do we set good financial goals for yourself. I always say a goal is not a financial goal if it does not have a number attached to it. We have great things we want to see for ourselves. There's many things we want to be able to achieve, but if it has a direct impact to your finances, it becomes a financial goal. And so there are certain steps that you want to go through it. SMART goals are, it's a system that is used all over for very many different things. So when it comes to your money, that's what we want to look at. How do you set SMART financial goals? Number one, when you're talking about being specific, is that it needs to be very clear and very specific. After I go through this slide, I'm going to show you two examples that I always get, and we're going to try and see how do we make these goals SMART. The other thing you want to do is make sure that it's measurable. That means that you know the time at which you want to be able to achieve them and the goalposts that you put for yourself to be able to achieve them. The other thing is that you want it to be attainable. While you stretch yourself, you don't want to be put yourself in situations that you can't sustain at all. You want it to be sustainable. And then relevant is that goal that you have set important to you? Does it matter to you? Does it align with other goals that you have set? Not that one goal is in Timbuktu and the other one is in Nairobi or Machakos somewhere. Try and make sure that it's relevant to your values and also to each other. And then finally is that you have a deadline attached to that goal. Goals that are just running up on air are very unlikely to be met. They're not likely to even to be met or have the impact that you actually want it to have. Now, we're going to do a small exercise. I have two goals here, and I want you to take your paper and pen and just write them down. These are goals that I always get as I work with people. One is someone will say they want to be rich or they want to travel. So we are going to take one of these goals, which is the I want to be rich, and we are trying to go and make it SMART. I'll walk you through how to make this each goal SMART. And then we are going to take you into breakout rooms, and then you're going to take the second goal, I want to travel, and I want you to make this a SMART goal. So we're going to just put you into smaller groups and then try and discuss in those groups, how do you make a travel goal a SMART goal? So the goal for I want to be rich, how do you make it SMART? Let's see. You start with being specific. Specific about being rich. Now, being rich is such a big goal. All of us want to be rich. By being specific, you want to define what rich means to you. How will you know that now I am rich? What is the thing you will see to say Juliet is now rich? So it could be having a certain amount of money in your account. So I will know I'm rich when I have 20 million shillings in my account at the end of the day. that's a specific goal. So because I've defined what rich means to me, and I've also put a clear end goal of what I want it to be. Measurable, that means I want to be able to track my progress and stay motivated. So if I want to be rich, if I want to have 20 million shillings, what goalposts will I have along my life so that I know I'm making progress towards this? So I can say if I want 20 million shillings, then it means I need to at least make 1,000,000 shillings every year in my life. So you see, when I bring that goal into my year, then I'm bringing it home. 20 million could be in, we're going to talk about time bound, but it could be in X year X. But now I say, I think I need to make 1 million every year so that I have 20 million in my account at the end of X years. And so when I have 1 million, I can even break it further down and say in every month, it means I have to make X amount. So when I don't meet that goal for that month, then I know I'm not making progress towards my goal. So it becomes a reality. Is it attainable? All right, now this is a question you want to be clear and honest about it with yourself. The goal should stretch you, but it should remain possible. So if I want 20 million in my account, and right now my account is at 0 shillings, and I also don't have a job. Miracles can happen. Yes, somebody somewhere could miraculously drop 20 million in my bank account. But what if they don't? So you look at your current situation and trying to see what do I have right now that can practically make 20 million shillings in year X a reality. So that it stretches you to work hard, but it's not an impossibility. Because if you give yourself an impossible goal, then you don't meet it. Then also now we are going to have a problem with that. Then relevant, how does it matter in my life? How does it align with the other things that I want to be able to do with my life? 20 million shillings in my account might be relevant because I want to be able to do this much thing with my money. So I see why I'm doing that. If you don't see why you want that, then it might lose the internal drive that you have for it to make it happen. And then finally, you want to have an end goal for this 20 million shillings. So 20 million shillings can be done within 5 years, within 10 years, within 20 years, at retirement. You need to have like the end goal that you have. When you have that, then measuring and tracking progress becomes a reality, becomes an easier thing to do. So what we're going to do is to take you into your breakout rooms, and then I want you to have just a short discussion, 10 minutes max, about how do you make a travel goal a smart goal, considering how it's going to affect your finances. How do I make this goal smart? We'll break you into the rooms, and then we need a leader in that room. So what we'll do is the first person, if your name is the first one in the alphabet, your first name is the highest on the alphabet, you're going to become the leader of that group, and you're going to coordinate the conversation. TK and I will be jumping into those rooms to just hear what you're saying and also provide additional guidance in case something is not clear. And then you're going to come back and hear a few things that people have to say about what you've discussed. So I don't know if I can get help from Benta for that, or let me just do it. Let me do it. So we're going to have small groups here, 6 groups. So when you get that prompt in your screen, just join the group. Waiting for everyone to join a group. You should see a prompt. So just click and join. Click and join. If you're here, does it mean you haven't gotten your group? All right, this group doesn't seem to be room one. Room one has a lot of people who are yet to join. Florence, Patrick, guys, do you have the groups? Welcome back, everyone. I hope that was a good session. I popped into at least 3 or so rooms and was able to hear what some of you had to say. So I think I'm going to let someone from room one, if you were in room one, the person who coordinated the conversation, please tell us how you defined your SMART goal. So we'll just only take 3 groups because of time, group 1 and group 3 and group 4. So just unmute yourself and just give us quickly what your SMART goal was for travel.
Okay, thank you, Juliet. My name is James Osonga from Uganda, and I was in room 1. It was a team of 7, and our team name is Champions because we are the champions. So we basically came up with our own SMART goal, and our SMART goal is we are planning a Christmas get-together party. That means it is definitely specific because of that title, and it is measurable because we are looking at accumulating about 5 million shillings so that we can have a blast come the 25th of December. Okay, so it is attainable because we made an assumption that each of us can actually afford to contribute 25,000 and we have it is relevant because at the end of that day, come 25th, we're going to be able to connect as a group, get to know each other, and at the same time have fun, okay, and celebrate the fact that Jesus Christ came, was born on that day at the same time. So it's time bound because we have 28 days to plan for this event, okay? And yeah, basically that's basically it. Thank you so much, Juliet.
Thank you, James. Thank you, James. The other one was group room 3. Room 3.
Hello.
Hi, Collins.
Yeah, I'm fine. This is Collins Otienoyo from Kenya, Kisumu, and I'm part of this. So our group was called the Winners. Winners and champions. We always the winners are the first position, then champions can come later. So generally, we were talking about our goal was to travel to Entebbe from Kenya for this holiday. So that was actually makes it very specific we are specific. We want to move, we want to travel from here to Entebbe for the holiday. And it's measurable because we had a target of 10,000 shillings. That is enough to enable us to move from here as a group up to Entebbe. We realized that it's attainable, assuming that each and every person was earning like $1,000, $1,000 every month is attainable. Then being on relevance, we realized that it was relevant to even our business goals because relaxation actually enables us to have the psychosocial benefit more sort of the human mind, and this one will enable us to increase on productivity come January, when now we start the new financial year. And we realized that it was also time, it was time bound because we specified a deadline to be able to get this amount, and we are able to monitor the progress of the of how we are going to acquire this money, and we are also be able to reevaluate the benefits that we will have at the end of this out. So I believe we have been able to make travel smart. Yes.
Thank you. Thank you very much. The final group was group 4, room 4. If you are in room 4, please let us know how you came up with your travel goal.
Hi, this is David from Lesotho. In group 4, our goal was to have a birthday travel overseas. Then the measurables, we need to travel within the 6 months. And in terms of attainability, the first, we said, because we have the jobs and we have the income, that we will need to work around on our expenses to make sure that we cater for that travel, and also look at different hotels that where we can find the better deal or price in terms of getting the discounts, and looking at the peak time, peak period season where there's normally the discounts being carried on. Then we say this is personal because it's close to our hearts, because the birthday is always something special to all of us. And then the last one, we said, yes, it's time bound because we need to do this in the next 6 months. Therefore, we need to make sure that our budget stick within the period of that 6 months. Thank you.
Thank you so much, David. Thank you so much. Those are great responses. I love it. I want to pull a first one. TK, are you in? You're the travel person. Just I want to pull a first one for you. Tell us how you'd make a travel goal smart.
How I would make a travel. Okay. Thank you, Juliet, and good morning to everybody on the call. So I'm also a travel.
We want to see you.
You want to see me?
Yes.
Hold on. Just I'm a surprise act, so you'll see me in a bit, okay? They'll see me when I start the session. So for me, I'm a travel blogger as well. So when it comes to putting together a smart goal when it comes to travel, for me specific would be, in this case, before there was a travel ban, given the the new variant of the COVID virus in Southern Africa, is for me, my specific goal would be, I want to travel to New York. So I love New York. New York City has a vibrancy that is really quite amazing. The second part would be measurable. So how much would I need to go to New York? I would need money for the visa, which is about, let me just do a quick conversion. So I'll need about, just a second. I would need about $140 for the visa. I would need about 800, for flights, I would need about $540. And then for spending money, I'll need a certain. So for example, I'll say for me to go to New York and spend about 7 days in New York on a vacation, I would need about maybe $20,000 US dollars in this case. By when do I want to go there? Is it attainable? Yes, it is attainable because I've got multiple sources of income. I am a blogger, I'm a content creator, I am a consultant, I am freelancing, and I've got my different side hustles. So from the different income I would get from that, I would then raise the $20,000 that I would need for New York. Is it realistic? Yes, it is realistic because I want to go to New York this time next year and I want to experience a white Christmas, you know? So I've got 12 months to get to that. So that also is time bound. And then is it attainable? Absolutely. Is it realistic? Absolutely. So that would be my smart travel goal to the United States of America, New York City, the concrete jungle, as it were. Thanks, Juliet.
Thank you so much, TK. Clearly, you, even on a whim, you can talk about travel. Thank you so much. Thank you for that. So basically, I hope you can see the main things you want to start thinking about. If you're making it specific, know where you're going, how much it's going to cost you to get there, know how much time you have to prepare, that's time bound. And then using that time bound, you use that to prepare for the cash that you're going to use when you get there. Connect it to your values. If the travel is a big value for you, your reasoning for the travel. And then measuring progress is basically from the point of knowing this is what it's going to cost and this is how much time I have. Then you measure in order to have enough cash by the time you're traveling. And so for every goal that you have that has a direct implication on your finances, you can take that goal through the SMART goal process as you prepare into 2022. So I'm coming to the end of my session. And if you have any questions, please put them in the chat based on what we've talked about. If you have a question, let me know. Let me know what your questions have. I'm really bad with time. I only have 5 minutes left. So I want to do the final slides and then we take 1 or 2 questions if we have any. If you have any questions, like I said, just put them in the chat questions. I will come back to it after I talk about what I have in store for you guys. So I had a quiz set out for you. I don't know if Benta can help me. Just put a poll on the quiz on. I had 2 questions to quiz you on the session on record keeping and the goals. Just put a poll on the goals quiz and let guys go through that as I talk about the next few slides. So I want to talk about products that I have that can help you. When we talked about record keeping, I have the Pesa Planner and the Pesa Chama Planner are 2 products that I have under Pesa Savvy. This Pesa Planner can be used to keep some of the records we've talked about and some that are going to even come up in CK session. So I wanted to talk to you about them. So these planners are, let me talk about the Pesa Chama Planner is good for savings group. If you're in a savings group or investment group, this is good to keep group records. The My Pesa Planner is for your individual records. This, especially if you're the kind of person who likes to take notes on paper or track things on paper and pen. If you're digital or Excel, then this might not be the best product for you. But if you think this would help you, you can get in touch with me. So what it does is that it gives you annual and monthly financial goal setting pages. It can also give you monthly budgets and monthly expense tracking pages. You can track your debtors and creditors and also do monthly goals and monthly reviews at the end of every month. At the end of every month, after doing all those things, you can review it and see how well am I doing with this particular goal that I have. Then this is a testimony that someone shared with me after they used the planner. Now, I want to say the planner is not magic, yeah? So she said she started a job in January and her son had been living with her son in her parents' house for 10 years and she wanted to move out. So she decided it was time to move. So she got this planner to help her with that goal. And she started saving for the move and managing her expense and was able to save about 500K Kenya shillings. And she's planning to move. So she used this journal to help her plan her finances until she was able to do what she intended to do, what her financial goal was. It's Kenya shillings, 1,500 shillings or $15. I can ship it within East Africa. So if you're in Kenya, Rwanda, Tanzania, Uganda, we can plan a way of you getting it. I also want to talk to you about my one-on-one coaching that I help people with, as well as the group coaching. There are certain things that differentiate them from each other. So I do offer one-on-one coaching with people. The examples that I shared with you guys were based on the coaching sessions that I've had with people. So with one-on-one is that you get 10 hours of personalized coaching within 3 or 2 months period, depending on our plan. You also get a financial planning document, including a budget template and your goals. You also get debt management or or investment track. So you could choose whether you want to manage debt or you want to take care of investments. And you also have unlimited support. If you have questions that we've not really gotten into, you can always get support from me. The group coaching is a bit different. You can do this with friends that you have, a group that you already have, or you can come into a group that I'm creating. With that, what you get is 3 hours of group coaching plus more online content. So you'll have to go through some of the content on your own. You'll also get similar tracks and similar end goals in terms of the financial planning document, debt management track, email and WhatsApp support. You can also get that. Now I have a special offer for you guys because you are in this workshop and there's a lot of things we've already covered. So because of you being part of our workshop, I'm really slashing these prices. I'm slashing them so that you can join and benefit from the programs that I have. So the one-on-one coaching is moving from $300 to $100, and then the group coaching from $150 to $50. Now the only catch is that you need to sign up and be part of my 2022 plan by making your first installment by the end of the year. So you have until the end of December, that period of time, to see if this is something you want to get in touch with, or you want to get help with. Everything we've talked about plus more, but now on an individual capacity. If you think this is something you'd be interested in, then I encourage you to leave me a message on my email. I'll put the email addresses there. I'll also put them in the WhatsApp group in case you want to reach out at any particular time. I'm going to stop here and try and see if I can answer some questions so that we can have time for CK to come back and to come in and share his part of the workshop. So let's see. Can you explain on time bound? Can you explain again on time bound? Time bound is that when you put a goal, you need to have the period of time by which you want to achieve it. For example, when you said, I want to be rich, everyone wants to be rich. But the way to it kind of puts pressure on yourself to work on that goal. You can say, I want to have 20 million shillings by 2030, for example. So when you put a time limit, to that goal so that you're actively working towards it. Goals that are just free for air for no period of time, or you don't know when you want to achieve it, are rarely met. But when you say, I have this time to work on this goal, and so I give myself the time goalpost. So every year I must measure how far am I to meeting that initial goal that I actually had at the beginning. I hope that is clearer. What percentages are reasonable when negotiating for a raise at work? I think that's very relevant. It's very dependent on your industry. It's also dependent on your own work, the work that you have. But I think mostly on a year-on-year salary increase, 10 to 15% is usually the standard. or the average, maybe not say standard, the average, but this can really change depending on your own performance, depending on the qualifications that if you got a qualification, for example, and what value does that bring to your job, and does it offer your employer any benefit for you having that qualification? Those are things you need to bring on the table to negotiate. I might give you a percentage right now, but you'll find that if you're able to make a good case for yourself, you'd end up even with a higher percentage than that. But put things in totality. And you can also, when it comes to negotiating, one of the tips of negotiating is that you give a very, you know that you're likely going to get 10%, for example, and you say, okay, I think I want 20% or 25%. It gives you wiggle room to pull it down to the level that you actually want it, yeah? So use that as a strategy. Time bound would be, when do you want to achieve the goal? Thank you, TK, for answering that. Chama, in the Southern context, yes, thank you, TK. May you kindly share the slides. All right, I forgot to mention this in the intro. All of this information are going to be packaged as an online course, and all of you will get a prompt on registering on that platform for the course. Some of you actually have, but because there are so many signups, it's taking a bit of time to do it. So just check out your email for an email from CFO Workshop. You will get access to everything, the video plus the slides plus the workbook. They'll all be there from beginning to end. So if you signed up, you'll be able to go through this information. Thank you. Yes, as TK has said, for the group session, can I join with friends who are not on this call? Yes, you can definitely do that. Join with friends who are not on this call and see how we can work together. It doesn't have to be someone who's here. It's free for all. How about if I saw that I'm failing to meet my goal? Is it okay to adjust, or I would have failed totally? No, you've not failed totally. Goals are not cast on stone. And that's why I said when I work with clients, we normally start with your overall goals. So we'll look at your long-term goals, but we'll also look at your short-term, 1 year, 2 years, all that. Every year or every quarter or every half year, you can come back to your goals and say, I wanted to do this in this period of time. Is it still something I can do? Do I still have capacity for that? So that's something you can still adjust. They are your goals, so you have to be able to achieve them and not put yourself in unnecessary pressure to achieve something that you really can't achieve. All right, I guess that's it for now. We're just going to give you 2 minutes of a break to get a cup of tea, or stretch your legs and or something like that, and then TK will come and take us on through the next session, which is the financial health session. Thank you so much. I'm still around. If there's another question that you have, you can also post it there. I will catch it maybe towards the end after CK is done taking us through his session. All right, 2 minutes. We'll be back in 2 minutes for the next session. Thank you.
And then leave up at some point. And then go on with the flow. But this is a whole, 360 view of my financial health.
Yeah. Well, don't worry. Like you said, I think like the last comment in the chat box where we spoke about if you're failing at one goal, does it mean you're a complete failure? And my response to that is, our finances are a journey, so let's enjoy the journey. It comes with its challenges, it comes with its flaws, but it really is quite an exciting journey to embark on. All right, I think let's start. Let me just get my screen ready here. All right, cool. So welcome everybody, and a big thank you to Juliet for facilitating the first session. My name is, I'll do the introductions now. Welcome to Become the CFO of Your Own Life, where we're actually gonna do a financial health check. Now, many a time people always say to me, TK, I don't have my finances in check and I don't even want to look at the numbers. So in this particular session, we're gonna unpack and we're gonna discuss your financial health check and how to go about it. All right. So without wasting any more time, let me introduce myself. And I always say to Juliet, I love introducing myself because TK Ntebe is such I call myself a multi-potentialite. A multi-potentialite is somebody who's got interest in a number of things different things at any point in time. So I am a financial wellness coach and financial educator. I have over 10 years working experience in banking, asset management, and telecommunications industry. I hold 5 degrees, but I'll speak about 2 degrees specifically that are relevant for this particular course. I have a Master's of Financial Management where I did a full dissertation with the University of Pretoria in South Africa. And I hold a postgraduate diploma in financial planning law with the School of Financial Planning Law at the University of the Free State in South Africa. I am a financial services advisor, an FSA, and a member of the Financial Planning Institute of South Africa. I'm a regular contributor to print and web publications where I write extensively and widely on personal finance matters. I am also the founder of TKO Consultancy based in Maseru, Lesotho. I'm a content creator. Hi guys, welcome to my YouTube channel. I have a YouTube channel, I have a podcast, and I have a blog. I will share the links later on in the program. I love to travel and I love to meet new people. So I'm looking forward to going to Rwanda, Uganda. I'm looking forward to coming to Nairobi. I'm looking forward to coming to, different places across the African continent, to Tanzania and the likes. And I'm also, like Juliet, I'm also a Mandela Washington alumni, class of 2019, where I spent about 6 weeks in Chicago at the School of Management. So that is me in a nutshell. And I am a nerd, guys. I am a nerd. I'm a lover of education and I'm a lover of people. All right. So what can we expect in today's session? What we can expect in today's session is we're going to do a quick icebreaker just to welcome everybody back. And then I'm going to talk about my 8 commandments of financial wellness. And then following that, we'll unpack what a financial plan is versus holistic wellness, because I'm a big advocate of holistic wellness. And then fourthly, we'll unpack how you would assist Juliana. Juliana was inspired by Juliet, by the way. So in the case study that I provided in the pre-workshop material, I provided a case study where Juliana is a 28-year-old young professional who has to make a couple of difficult financial decisions. So we're going to work through that case study. And for the people who have not done the workshop, the pre-workshop material, do not stress. We will just do a quick recap and then we'll go into that in the breakaway rooms. And then we're going to do a financial health check where wherever you are, you'll work through your individual finances, looking at the formulas that is also provided in the material that we've shared. And then we'll discuss the where to from here. Many a time after the sessions, people feel depressed, people feel defeated. But what I want you to take away from this program or this session, and what Juliet spoke about earlier on, I want you to walk away with the belief that you can become the CFO of your own life and you have control over your personal finances. And then we'll do a quick Q&A session, and then we'll do the closing of the program. So let's get straight into the icebreaker activity. I love to talk about money and I love me some money. So the one question I have for everybody on the group is drop your response. It can be a one word, it can be a phrase. Drop your comment in the chat box and tell me, what is your current relationship with your money? How would you describe your current relationship with your money? Drop me a chat. If you want to unmute yourself, you can just raise your hand and let's hear what you would describe as, oh, I love that, fast and the furious. What is your current relationship with your money? And Eunice, I'm assuming that what you mean by fast and furious, it comes in, easy come, easy go. It comes in and it's gone. I see a word here, it's a dog and a cat situation. And currently in Maseru, it's raining cats and dogs. So, when I see a cat and a cat, I love that. Reserved by Naomi. Okay, great. I love that. I'm assuming you're also very conservative in terms of your approach and you're extra introverted, as it were. Patrick says improving. Katrina says, I want money, it doesn't want me. Oh my goodness. I love that. You want the money and it doesn't want you. So maybe Katrina, after this, I hope I'm pronouncing that correctly as well. I'm hoping after this session, you will also, the money will come back to you, because once you have that relationship intact, everything goes well. Irene says it's complicated. Harriet says, we just decided the other day to become exclusive. No, Julie, Harriet, it needs to be an entanglement. It's a Tom and Jerry situation. Oh my goodness. Love-hate relationship, comes and goes, looking for money. Ish, always fighting. My current relationship with money is not appealing at all. Income less than the expenses. Emma says, I want it. It doesn't come close to me. Lorato says it's improving. Spot at TK. Stuck in debt, hoping to get better, which is very possible. Home and away, not happy at all. It's always running away from me at every time I get close to it, So I look at all these comments and I always say to my clients as well, similar to what Juliet says, I'm sure, I always say, if you don't have a relationship with your money, whether it's a cat and dog situation, but if you don't have a relationship with your money, and that's where it starts, but do not worry, we're going to unpack all of these in today's session. And I'm hoping by the end of the session, the unsure will become, I'm sure. The not happy at all will become, I'm very happy. The home and away we'll be at home, not happy at all, home and away. Stuck in debt will be, you know what, I've paid off X amount of debt. Improving will become in control. I want it doesn't come close to me, we are together like this. My current relationship with money is not appealing, will change to it is appealing, and I'm loving their journey together. So I'm hoping, thank you so much for the icebreaker activity, and I'm hoping that sets the tone for the conversation we're going to have this afternoon. So getting straight into my 8 commandments when it comes to your financial wellness. I always love to put up the slide whenever I have the privilege of speaking at a financial wellness, financial education, or financial coaching program. The first thing, or the first order of the day, is we need to eat, So you need to have food in the fridge at home, or you need to have something edible to keep you going, because if you don't have food, you don't have energy. And if you don't have energy, you cannot do the things that CFOs do, which is to analyze, to track the cash flow, and to find the financial strengths of the company. So the first thing is we need to have a budget, or what I love to call a spending plan for our groceries and our immediate needs. The second thing that's also very important is we need to have a relationship with our money. And many a time when you look at things such as debt, why are you going into debt? What are your reasons for you on taking on debt? The third thing that's also very important when it comes to my 8 commandments of our financial wellness, and I'll unpack a bit more when it comes to the next slide, where I'll speak about holistic versus financial planning, is the health risk. We live in very uncertain times. We saw COVID come in. We've had swine flu. We've had multiple diseases. A lot of young people are on the roads traveling from one place to the other. We spoke about setting smart travel plans. So the health risk becomes very, very important. So when I speak to people, my question to them is always, do you have medical aid, or do you have a hospitalization plan in place that can help you achieve what you need to achieve? The fourth thing that I love to speak about is, in the event of you passing away, or in the event of a loved one passing away, do you have funeral policies or policies in place such that that particular incident or occurrence in your life does not affect your financial well-being? Taxes. We are entrepreneurs, we are self-employed, we are freelancers, we are employed. What is your current financial situation when it comes to your tax affairs? The other thing that's also very, very important for me is retirement. A lot of young people think that they're too young to save for retirement. And I always say the one thing we have at our disposal is we have the benefit of time. And time equals time value of money, and time equals compounding interest. And speaking about retirement, many a time when we speak about retirement, people who are self-employed or freelancing will say, I don't need a retirement plan. And for me, a retirement plan simply says you need to have income in your retirement years, but not just income. It also speaks to having activities that will keep you busy. Because what I've seen, and I'm sure it's the same narrative across the African continent, is what I've seen is people retire after many years of working. And once they've retired, they then step out and say, I go home, and after 2 weeks, they're depressed, and after 2 weeks, they pass away. So what activities do you want to occupy you when you are in your retirement years? And it starts with us planning them today in our youth. And the last and very important commandment is your estate planning. How many of us actually have a plan when it comes to our estate? Should you pass away, what do you want? How do you want your estate to dissolve, or who inherits what of your estate? In the African context, a lot of Africans do not really focus when it comes to the estate planning. And that's one commandment I'm hoping that today's session will get you thinking about your personal finances. All right, moving swiftly along. So when it comes to retirement, when it comes to planning your finances, I always say there are 7 things that your financial plan needs to have in place. And that basically means you need to have a financial health check, which is what we're going to be focusing on today. What I mean by that, in your financial plan, whether it's your business or your personal financial plan, you need to have the following. Do you know your net worth? Do you actually know your financial vitals? What I love to call the financial vitals, which is what we'll discuss today. Where are you in terms of your financial health check? Do you have savings in place? What's your debt situation like? What's your cash flow that Juliet spoke about? What's your income and expenses looking like? So we're going to talk about all of those things today. The second thing I love to speak about when it comes to a financial plan is risk. If anything can go wrong, it will definitely go wrong. The question I always ask is, what happens? Are you adequately covered in the event of anything going wrong? If your house was to burn down, if your household contents was to be taken, do you have a plan in place? If a loved one or yourself was to pass away, do you have a plan in place? If your car was to be in a car accident, do you have a policy that will protect you should anything go wrong in your life? The third pillar of a financial plan is basically understanding your investment. Juliet spoke about investment strategies. Sorry, guys, I just need to, Juliet spoke about having an investment strategy, okay? So what investments where are you placing your money? What is informing the investment strategies that you have in place? This also applies to your business or your personal finances, There is, every single instance, there is pyramid scheme or some scheme popping up. Is that scheme that you are investing in aligned with the investment strategy that you want to achieve? I spoke about retirement. The one thing that young people have is time and the benefit of compounding interest. The sooner or the earlier you start planning for your retirement, the better, And people always think that you have to be in employment for you to start thinking about your retirement. And I always say, as freelancers, as business people, we need to be thinking about providing solutions for our employees, if you're an employer of a small business or a small medium enterprise, for the people who work for you, because retirement benefits will help them achieve what they want to achieve. The fourth thing that's also very important when it comes to retirement is the earlier you start, the better you can start benefiting from compounding interest. And you don't need to start with a lot of money, because say, for example, you start with $50 or $200 a month and you're consistent about it, then you start benefiting from that time and time again. Taxes. Many a time, young people do not think about their taxes, whether in business, whether in freelancing, consulting, or in employment. And imagine a case where the tax authority of your specific country comes knocking at your door and says, you know what? You owe us $50,000 worth of taxes that have not been paid. What would that impact have on your financial position? And many a time, CFOs of businesses are looking for ways to reduce the tax liability. How are you, as the CFO of your own life, looking for ways to reduce your tax liability? And there are many ways that I will not get into particular in today's session that you can go about reducing your tax liability using the benefits and systems or deductions, allowable deductions that the different tax authorities put in place. The sixth thing that's also very important is your estate planning. I spoke about the estate planning. Your estate planning is very, very important, especially in the African context, where we've seen upon your passing, if you're a parent, the uncles, aunties suddenly come in and they want to take over your kids' estate and then leaving them financially distressed. And then if you're a parent, financial education planning when it comes to that. But the reason I want to speak about the financial planning, but putting that into context of the financial wellness dimension is we cannot, Juliet and I and all the other people in our industry, we always speak about financial well-being or financial wellness. But I'm a strong believer that we cannot advocate for financial wellness in isolation. And the reason I say this, if you are not emotionally okay in terms of your psychological well-being, it means that you are most likely to spend money, you know? So if you're not okay and you're not dealing with your emotional or your psychological needs, it means that you are going to spend money either buying things you don't need or going to places you don't need, or you're going to spend money in one shape or form. The second pillar that's also very important is if you're not physically okay. So if you're not exercising, if you're not eating well, if you're not taking care of your body, chances are you're going to spend money. So it then becomes important for us to speak and work with physicians and people who are in the fitness industry because they have an implication of our financial well-being. If you're not okay in terms of your family, friendships, and romantic relationships, social relationships, chances of you spending money are very, very high. If you're not okay spiritually, and I'm not speaking about religiously, if you're not okay spiritually, it means that you spend money to close that gap when it becomes important. The fourth thing that's also very important, if you're not intellectually stimulated, if you're not reading books, if you're not really listening to podcasts, if you're not using your mind to be inspired or to think about things that inspire you, it then means that you're going to spend money because I love what a colleague of mine from South Africa, Nicolette Mashile, loves to say is idle money equals gone money. So if you're not intellectually stimulated, if you're not developing yourself, if you're not doing short-line courses, if you're not mentally stimulated, it means that your money is going to find ways for you to spend, you know. So that becomes very important. If you're operating in an environment that is toxic, that has a lot of rubbish, litter, and toxic things around it, it means that you're going to fall sick and that affects your money. If you're not okay occupationally in terms of your profession and your career, chances of you wasting money and spending money are very, very high. So for me, and I always say to Juliet and my clients as well, it's important for us to be financially well, but I always advocate to my clients and everybody on this call that we also need to be intentional and deliberate about taking care of our holistic wellness. So if you are not okay mentally, my words of encouragement is speak to a qualified psychologist. If you feel like you're not stimulated at work, start reading articles, start listening to podcasts, something that will inspire you to think and be inspired. If you're living in a toxic environment or you're in a toxic relationship, start finding ways and strategies for you to leave, because ultimately all those things are going to affect your finances. So with that said, let me get into the order of the day. Juliet spoke about the CFO who comes in and sets financial goals. The first thing I love to say when it comes to personal finance is, ladies and gentlemen, personal finance is exactly that, personal. So what's important to me as TK and what's important to Juliet or to David or to Christina or to Eunice is very, very different, because we are different people and how we relate to our money is very different. So many a time we love to apply a blanket approach when it comes to personal finances. Yes, there are industry recommendations, but let's always remember that personal finance is personal. So when you start setting those SMART goals that Julia spoke about, your financial goals, remember that your personal finances or your personal goals are personal to you. So the first question I always say, building on to what Juliet says, is what about your money is important for you? So wherever you're sitting in the comfort of your home with your notebook, just write down 1 or 2 things that are important for your money to do for you. It could be, I love to travel. It could be, it gives me financial security. What about your money is important for you? The second question for you to ask when it comes to your financial goals is, what financial goals do you actually want to achieve? Juliet spoke about the specific, measurable, attainable, realistic, and time-bound. But what financial goals do you actually want to achieve? We have less than 4 weeks left of 2021, and we have 2022 starting. What financial goals do you want to achieve? The third question you want to ask is, what is your current relationship with your money? In the icebreaker activity, people shared their relationship with their money, but what relationship do you want to nurture or cultivate going forward beyond today? Do you want to have a healthier relationship with your money? And do you want to improve your relationship with money? What relationship with your money do you actually want to nurture? Moving on to the second part that plays a big role when it comes to our personal finances, and that is understanding your money personality. Every single person has a money personality. What is a money personality? Growing up, how our family, our parents, our loved ones used money influenced and shaped how we also relate to money. So it could be that you grew up in a family where your parents or your loved ones were spending money excessively, and that sort of kind of shaped your money personality. So wherever you're sitting, would you say you are an excessive spender or a compulsive spender? Or you could have grown up in an environment where your parents were very stingy or frugal when it comes to money. So you are growing up in an environment where money is very scarce, and therefore that has shaped your money personality. So in your shape, in your life, how would you describe your relationship with your money? Are you a compulsive spender? Are you a compulsive hoarder or saver? Or are you a money maker? I've met people where the initial inclination is wherever they have money, they see an opportunity to grow and increase that money, but then they don't have the discipline to actually save it. So understanding your money personality plays an important role when it comes to doing that. The third thing that's very important when it comes to our money is our money stories. So what I mean by money stories is many a time we tell ourselves stories to convince us or to rationalize why we are making specific financial decisions. For example, I work so hard, so I deserve to spoil myself. There is absolutely nothing wrong with you spoiling yourself, but the moment you are spoiling yourself excessively, or the moment you are drinking more alcohol because you work hard, or the moment you spend excessively on certain things, shoes, bags, whatever you want, it then has an impact on your overall financial situation and your ultimate financial plan. So what money stories are you telling yourself, and are you willing to interrogate those money stories? Juliet spoke about looking at your bank statements. A CFO usually looks at the bank statements because the bank statement will give you patterns and it will show you a track record of how you are spending the money. So part of your money stories that you need to interrogate is, are the stories you are telling yourself around your money important? I know one example that I usually do is when I want to buy new equipment, like I mentioned, I'm a content creator. When I want to buy a new equipment, either microphones, lighting, or cameras, I always say to myself, you know what, content requires a specific quality of production. So this is why I need to buy this particular piece of equipment. I always have to go back to myself and ask, am I really in need of this specific equipment now? Or is this a money story that I'm telling myself? When you're walking down the grocery store to do your shopping and you start buying things that are not on the shopping list, and you keep saying to yourself, I need this because I work so hard. Do you actually work hard, or are you convincing yourself that you're working hard to justify you making that extra purchase? When you buy that extra pair of bag for the ladies, or that extra pair of sneakers, or that new car, do you actually need it, or do you actually want to need it? And therefore you tell yourself specific stories that justify what that means. All right, I said a lot. So the question for today in the chat box is, are you financially healthy? So whoever is listening or whoever wants to unmute themselves, I'll give you 1 second. Please, are you financially healthy? Are you financially healthy wherever you're sitting? If you can also drop a comment in the chat box. Would you say you are financially healthy? And if you are, what does that mean? And if you're not, what does it not mean? Are you financially healthy? Rachel says, no, I'm not. Leanna says, Lefa says, no, I am not. Who else thinks they're not financially healthy? If you were to ask me, I am financially healthy, and I'll tell you why I say I'm financially healthy. Financial health means to me that I know where I stand, whether it's improving or it's not there yet, but I know where I am. Harriet says, no, I'm not. Everybody says, no, I'm not. I'm looking for somebody who says, yes, I am financially healthy. Are you financially healthy? That is the question for this session. Are you financially healthy? I need more comments before I continue with the conversation today. All right, in the absence of, I think I am, I have my pitfalls. I love that, Katrina, I love that. No, I'm not from Eunice. Yes, I am from Patricia. Yes, Patricia, we see you. Naomi says, I am, but Black tax is killing me. And Naomi, I'm gonna talk about Black tax in this specific context. So in the podcast episode I did with a friend of mine who's a psychologist, we spoke about the concept of Black tax. So for the benefit of people who don't know what Black tax is Black tax is deemed to be, I am TK, I'm the first graduate in my family who has the opportunity to get an income. And therefore, because of my siblings, my aunts, my uncles, I then have to provide a monthly income to support those that come after me. And many people, specifically in the Southern African context, feel like Black tax is a big deterrent because you have this obligation or responsibility where you have to give your loved ones money every single time, and therefore you are unable to progress or achieve some of the financial goals that I choose. So I know it's not part of this context, but since Naomi brought it up, I want to talk about it. For me, we decided to recoin or reframe the word Black tax to gratitude because Black tax has a very negative connotation to it. Secondly, as Africans, we have a responsibility because we come from African families to support some of our family members financially. But, and this is a big but, we need to also normalize having honest, difficult conversations and setting financial boundaries when it comes to providing and supporting our families. This means having a conversation, for example, sitting down with their family and say, this is what I realistically can afford to give you on a month-to-month basis without taking away too much from my own financial goals. So the second thing is having those boundaries in place to say that I am going to give you $200 a month. You then need to learn how to operate and function within that $200 that I give you, So we need to have those boundaries in place. So for me, Naomi, I would say, one, define how much you are comfortable to provide and support your family with. Number two, have honest, difficult conversations and set those boundaries. And then number three, encourage your families to also start thinking of ways on how they can manage and grow their money that you're providing them on a monthly basis. And then fourthly, let's rephrase or rename the word Black tax to maybe something more positive and uplifting, such as gratitude, because we grew up in families where we have to support our families. Emma says, I am not sure, so I love that. And then Eric says, yes, I am financially healthy. I'm applauding for you. Katrina says, the first time you say no, they will be in shock, but they will get used to it. I absolutely agree with you. I always say, you cannot give from an empty cup. So you need to put an oxygen mask on yourself first, but also remembering that we have a responsibility, not an obligation, responsibility to take care of our families because we are Africans. We are not Europeans, we're not Americans. So let's learn to say no where we need to learn to say no, and let's put those boundaries in place. All right. Now, how do we get the people who say they're not financially healthy? So we're going to do a quick exercise focusing on Juliana. So I hope everybody has access to the case study because I did not include it here. So using the spending plan or the template that's available here is how would you assist Naomi? Well, I'm speaking about Naomi now. How would you assist Juliana, a 28-year-old female who's a business analyst working for a fintech company? Juliana is a vibrant has a vibrant social life and is about to get married. She enjoys eating out and traveling. She currently rents a 1-bedroom apartment and owns a small portable car that she uses to get around. Juliana's financial goals are to 1, buy a house within the next 12 months, 2, plan for her wedding, and 3, increase her investment portfolio. Juliana earns a monthly net salary of $4,000. So using the spending plan, how would we encourage Juliana to use her money? So with the assistance of my virtual assistant, we're going to break you guys into breakaway rooms, and using the same example earlier on, the person who's in the group, the person with the first letter in terms of the alphabet will take the lead and facilitate the conversations. So looking at, and just make sure, I know Juliet's shared the case study. So in terms of the template, we have the template provided. And then in terms of Juliana's examples or monthly expenses, those are in the workbook, the workshop workbook that you have available. So Benta, please assist me with breaking people into breakaway rooms. The assignment here is, how do we help as a group? How would you help Juliana prioritize her expenses and help her achieve the financial goals that you want to achieve using the template provided? So Benta, please assist with just facilitating the breakaway rooms, and then let's get people into those groups. We have about 15 minutes for this workshop, and then we'll come back and reconvene in about 15 minutes of the workshop. All right. So I hope everybody understands the assignment. Please join a breakaway room. The first letter of the alphabet in the group takes the lead, and then we discuss how we would prioritize Juliana's income versus her monthly expenses, and then we'll take it from there. Is everybody aligned? Do we understand what needs to happen? Can I get a yes for yes, sir? Yes, no? Juliet?
Yes.
Are we still aligned?
Well, I'm still seeing a few people still trying to join the groups. Until we get this number low, that they're not yet in groups. As far the assignment is, Harriet needs to be assigned to a room. So I think we may need to go into the rooms and maybe explain it a bit better. So
Yeah.
You said the assignment is the activity on the workbook.
Pre-workshop.
Right?
Yeah, pre-workshop material.
Pre-workshop.
Pre-workshop, yeah, the Juliana case. So we basically just, people did the workshop prior, but we're just discussing it as a group and then giving a response collectively as a group.
Let me post it again on the group as well, in case.
All right, no, thank you very much for that.
Okay, thank you, Patricia. Somebody said they needed to be assigned a room. Who's that? Harriet. Harriet, are you still here? Okay, she's in room 3 already, all right.
Okay.
I'm seeing 12 people who are not in rooms. Okay. So TK.
Yes, ma'am.
Can you join room 1, 2, and 3? Then I join from the bottom, rooms 5 and 4, just to make sure that they know what they're doing.
Yeah, I can, but I don't have the option to join and move around.
Oh,
Yes, please give me access.
okay. I don't think we can give you access before. Hmm. So you've been assigned to group 1. Did you get that, the room 1? Did you get the prompt?
I got the invite,
Mhm.
but then I suspended for a bit earlier on.
Okay.
Yeah.
So let me take you to one group, then I can move you after a few minutes. Because I don't
Okay,
think we
cool.
have like, yeah.
All right, no problem.
All right.
Right. Welcome back, everybody. All 45 people are here. So how was the group activity? And I'm dying to hear what the different people said and what the different teams said. So in the interest of time, I will open up the conversation to 3 people, well, 3 groups, starting with room number 3, breakaway room number 3. Please unmute yourself and let us know how you would help Juliana navigate her current feelings of feeling like she's inadequate and inefficient. Breakaway room number 3. Breakaway room number 3, going once, going twice. Sold if you don't come on board right away. Okay, in the interest of time, let's move to breakaway room number 5. Was there anybody from group number 5 that wants to give us feedback?
Okay, maybe I'm Fred. And
Hi,
in our
Fred.
in our group, we were saying because she has a goal of owning a house in the next 12 months, and her income is a bit fixed at $4,000 per month. Then she has things she can reduce on. Now things there, okay, some things there are fixed, others are variable. For instance, monthly rent is a bit fixed. It's fixed in the short run.
Mm-hmm.
Food and groceries somehow fixed, and also the loans, student loans and the loans there, they are a bit fixed. But there are things that she can really reduce on. Now she's a data analyst, and furthermore, she's working. Probably she's supposed to work from the house. It's in lockdown.
Yes.
So that she'll indeed reduce on. So she needs Wi-Fi subscription. So probably she will not reduce on Wi-Fi subscription. So she needs it. Entertainment is eating a chunk of her budget, $1,000. So really, she's supposed to reduce on that because she needs time to work now that she's working online. Also, clothes, she's inside. I mean, she's supposed to work from home, so she may not need much, when it comes to clothing. I think even she can stay in the house without having to put on expensive stuff. And also Netflix. Really, she's looking for money. She needs to hustle more. So this issue of Netflix she can do away with. Maybe petrol and transportation. She has a personal car. She doesn't need to really move around much. Okay, it's a lockdown, for God's sake, so she can do something about transport, petrol. Family support, debatable. She can reduce on that if possible, because it depends. Maybe someone is sick, she supports her medical care or something like that, but maybe she can do something on it. And of course, all that, the saving that she'll have made from those reduction can be directed to savings investment for her to realize her dream in 12 months.
Yeah. And I think, Fred, you mentioned something very important. She is working from home, but the lockdowns have been uplifted, And the other thing is she's also she loves eating out, and she's also has a very vibrant social life, So the clothing, the entertainment are a part of her lifestyle. But I love the fact that you do mention that she can cut away and break down or reduce some of those things by actually taking advantage of the fact that she is actually working from home. So maybe instead of eating out the whole time, she can start buying groceries and hosting at her apartment instead of having to buy food out, But no, thank you so much for that. And then the last group, group number 6. Anyone from group number 6? Group number 6, going once, going twice. Sold. Okay, we are managing our time, so I'm going to move on. But thank you so much. I hope that this exercise has really opened up your mind to say that the beautiful thing with personal finance is, 1, it is personal. And then 2, we can always change and navigate and track our expenses. Juliet spoke about CFOs tracking their cash flow. They spoke about financial planning, and this is what it really boils down to. I don't like the word budget. I love the word spending plan because budget can become very restrictive and people don't like the word budget and they therefore do not follow it. But again, rephrasing it to something like a spending plan makes it easier because you are planning your spending and you're telling your money where you want it to go. So when we speak about financial health check, I always say, always say, whether you think you are financially healthy or you're financially unhealthy, knowing your numbers forms a very important part. And for me, I dare say it's a form of self-care. What do I mean by self-care? We have a trend where people are doing self-care Sundays, people are doing self-care wellness days. Knowing your numbers, your financial vitals, like I call it, is very, very important. So for me, when it comes to a financial health check, the first thing that's very important is savings and investments. How are you going about your savings and your investments? And again, I want to emphasize the difference between savings and I want to emphasize the difference between investment. Secondly, is do you have a savings or investment goal? We spoke about SMART goals earlier on. How much savings do you currently have? If you have no savings, it is okay because why? We can change that. How much do you have in your investments? Juliet spoke about understanding your income statement, your balance sheet. So how much of your personal income statement and how much of your personal balance sheet goes towards your savings and your investments? Earlier on, we spoke about debt management. How much debt do you currently have at this point in time? The reason I asked that question is people never want to look at how much debt they have currently. How many months do you have till you pay off that debt? You could have taken a personal loan that will take you 60 months to pay off. How much time do you have until then? Why is this question important? Is once you know how much time, then you can put in place a plan to accelerate the repayment thereof. How much interest are you actually paying on your current loans? So say, for example, you have a mortgage bond, you have a personal loan, you have an overdraft, you have all of these, a credit card. How much interest do we actually know that we are paying off? The liquidity and net worth calculation. Do you have current assets? What are current assets? Do you have current liabilities? What are current liabilities? If things were to go south now, how likely are you able to pay your short-term obligations? For example, you have an overdraft that you need to pay off and need to service on a monthly basis. You have a credit card, you have obligations. If things were to go south now, you lose your job or you take a salary pay cut, like many people did during the lockdowns or during the COVID era, how quickly are you able to pay those things off? How much assets have you actually acquired in 2020 and 2021? And how much liabilities do you currently have? So these are the questions that you need to be thinking about and that you need to know. So the first ratio that I want to speak about when it comes to your ratio, and I unpack all of these in the worksheet that we provided, the savings ratio. The savings ratio is important because it helps us determine how much of our income goes towards savings. The formula thereof is, say for example, you're saving $10 on a monthly basis. And in Juliana's case, she has $4,000 US as her income. So you're gonna take the $10 and you're gonna divide it by the net income that you receive. So in your individual capacity or in your individual space, what is your current savings ratio? And the recommendation thereof is you need to be at least saving 15% of your monthly income. So when you do your own individual numbers, what does that look like? And say, for example, your savings ratio is 2%. How then do you improve it to 5% or 15% to get to the 15%? Your expense to income ratio. This ratio helps us determine as a percentage how much our income goes, sorry about the paying off debt, but how much of your income goes to paying off your monthly expenses. And there are many ways you can track this. One of my recent favorites is the 50-30-20 ratio. Actually, it's a 20 ratio. Apologies for that typo. So this is where you say 50% of my income will go to pay off immediate needs, 30% will go off to paying off my wants, and then 20% goes to paying off my savings. There are different ways you can go about this, but we always say the lower your ratios, the lower your expenses, you need to keep your expenses as low as possible and you increase your income as high as possible, because you want to have disposable income to help you build savings and to build that emergency fund, and then obviously to build your investments. The third ratio that's very important is how much as a percentage of your money as a percentage goes to paying off debt. Now, many a time when I speak to my clients, the recommendation or the benchmark here for a debt service ratio is 35%. This includes your car, your mortgage, your credit card, your personal loan, your overdraft. So if you're looking at your financial vitals, what is your debt service ratio? There's a time in my own personal life, I had a debt service ratio of 70%, and I was shocked. And then after being shocked, I then realized that I need to put in place a plan to reduce my debt levels. So I started paying off my credit card. I started paying off my overdraft facility. I started paying off my personal loan and other small loans in order for me to get my debt service ratio to an acceptable level. The fourth ratio that's very important is your liquidity ratio. How quickly can you convert your current assets into cash in order for you to cover your short-term liabilities? So say, for example, we go into another lockdown, 21 more days, and you are unable to earn an income, specifically if you're a freelancer or a business person. What current assets do you have in place that you can liquidate, convert into cash in order for you to pay off your current liabilities? Current assets, as an example, could be your money sitting in your check or your current account. It could be money sitting in your money market fund. It could be money sitting in your savings account. It could be money sitting into your treasury bills. How quickly can you convert those assets into cash such that you can pay current liabilities such as your overdraft, your salaries, your credit cards, your short-term obligations that are due within a 12-month basis? And the recommendation is your current assets, you need to have twice your current assets for every one current liability that you have in place. So wherever you are, what is your current liquidity ratio? And then the last ratio that I'll speak about for today's session is your net worth calculation. So your net worth calculation is how much total assets do you have versus total liabilities, And the thing when it comes to net worth calculation, young people, because we are young, normally your net worth calculation will be a negative. Because why? You are starting out your career, you're building out your business, so you're taking on a lot more debt to finance some of the things that you want to achieve or to acquire those assets. So if your net worth calculation is currently still negative, do not go jump off a cliff to think that you are financially not okay. But knowing and tracking your net worth calculation will help you achieve and work towards achieving the goals that you want to achieve. So all these ratios are provided in the worksheet material that we've provided. But wherever you're sitting, maybe for 2 to 3 minutes, let's maybe work on your individual savings ratio. So using the financial ratios provided below, how would you calculate your current ratio and your debt service ratio as an individual for November 2021? So we are closing the month of November, and Juliet spoke about the importance of closing months. So the ratio is savings. How much did you save as a percentage of your net income, and then multiply by that? So maybe take a minute or two, calculate your current savings ratio and your monthly service ratio as an individual. And if you want to post it in the comment section, maybe you can just tell me what your current ratio is versus the benchmark that we spoke about earlier on. So maybe just take 2 to 3 minutes to calculate your savings ratio and your debt service ratio. Julia spoke about the importance of us determining tracking our spending and tracking our numbers. And this is that case where the workshop will speak about a general savings ratio, but we don't really get to the individual one. So calculate what your current savings ratio is, and then drop a comment in the chat box and let us know what your current savings and debt service ratio is for this particular month. All right. I think we are almost running out of time, so we will extend the session. Kindly allow us 10 more minutes to wrap up. I'm almost done with my session as well. Eunice says, hi, TK, my numbers are all over the place. I recently secured a mortgage, thus my savings ratio is 5% and debt service ratio is 75%. So Eunice, the fact that you've acquired a mortgage bond is actually good, because it means that you're planning and thinking for the future. So 5% savings ratio is not too bad, but yes, there are creative ways for you to get to the recommended of 15%. So for example, let's suppose Juliana is using her skills as a business analyst. What skills do you have that you can use to increase your sources of income? Maybe you can provide financial advice, well, not financial advice. Maybe you can consult on a freelance basis, whatever skills that you can have. Maybe you can start a side hustle that you can literally grow to increase your sources of income. But remember that a mortgage bond is a long-term liability, which you can also reduce over time. So do not beat yourself up about that. It will take probably 10 years to bring down the mortgage bond to an acceptable level, because for the next 5 to 10 years, you'll just pretty much be servicing the interest on that. So it's not too bad. But now that you know it's 74%, what strategies are you putting in place to bring it down? Okay. Fred says 67%. So I'm assuming that is, okay, savings ratio of 67%. Not very good, Fred. So maybe what you need to then consider, I don't know if it's just savings, then maybe what you need to consider, Fred, is moving some of that money out of savings into investments where your money can start growing for you. Savings ratio of 20%, that is good, Deborah. Debt service ratio of 17%, that is amazing. Wow, okay. Savings ratio by Harriet of 26%. Debt service ratio of 8.3%, thanks TK. David says savings ratio is 6% and debt 21%, mostly due to the residential home loan. So David, your debt service ratio is looking good. Maybe what you need to be intentional about going into 2022 is increasing that savings ratio from 6% to maybe 8%. And this is where the SMART goals will come into place. Thank you so much, guys. So technically, you guys are actually very financially healthy. And then the second question that you will do in your individual space, using the template provided, then maybe work on your personal statement of financial position. So basically, the template clearly stipulates what assets do you have in place, what non-current assets do you have in place, which are longer-term assets, what current assets do you have in place, and then you compare that versus your non-current liabilities and current liabilities. In your individual capacity after this workshop, just work on that income statement and that personal balance sheet that we've provided. And like Juliet said, this is what a CFO does on a year-on-year basis. So if you want to review your performance at the end of the year, look where you were in 2020 in terms of your assets and your liabilities, and what movement or changes have happened in 2021 going to 2022. An example would be Eunice did not have a mortgage bond in 2020, but he has recently acquired a mortgage bond in 2021. So her current liabilities will change. But once she knows where that is, that becomes very, very important for her to make informed decisions. So as we tread closer to the end of the session, a lot of people always ask me after a financial wellness program like this one is, what changes can I make, TK? Some people leave the workshops feeling depleted. Some leave excited and energized and inspired. So for me, there's 3 takeaways that I will say I will leave you guys with today. The first one would be, if you are not financially healthy, or if you have made financial mistakes, the first order of the day would be to forgive yourself. The very first important thing about personal finance is it is personal, but it can change. And we always say personal finance is 80% behavior and 20% knowledge. What Juliet and I have shared today is 20% knowledge. This means that 80% is your behavior. What do you decide to do from this point onwards? So forgive yourself, acknowledge the financial mistakes and forgive yourself. Work on a plan using the templates that we've provided and the stories that we've shared today. Be intentional and put in the work. Earlier on, Juliet said that The CFO reviews every year. Part of your financial situation changing will not happen by a miracle. Miracles do happen, but you need to put in the work. It starts with cutting down expenses, increasing your sources of income, being responsible about your savings, and then find an accountability partner. Because let's be honest, it becomes very difficult for you to do this by yourself. So find a financial coach, find a financial advisor that's qualified, find a friend who can support you on your journey to becoming financially free. The second thing that I want to emphasize today is let's get into the habit of paying ourselves first. What I mean by that is the moment you receive income, the first person you should be paying before your mortgage, before your bank, before your creditors is pay yourself first. What you do is you take money, you put it into your savings for emergencies, and then you put it into investments where your money will start growing and compounding interest will become a part of your financial plan. Start with whatever amount that you have. So if you can realistically save $10, start, commit, and be consistent and grow it year on year. The second thing is to automate your savings and be disciplined. What I mean by automate your savings is, for example, you have a check or a current account, is use technology via internet banking or debit orders where you are saying, I'm committing to save $20 every single month. That money moves from your transactional account into your saving or investment account. So using a debit order where a third party such as a bank or an asset management company will take money out of your account into your savings and investment account. That's what I mean by automate your savings and be disciplined by that. This also means that you need to check and honor your debit orders on a month-to-month basis. Juliet spoke about reviewing your bank statements. That's another form of financial health check. The third thing is start investing and start investing now. So there's this thing that you get stuck in a savings account. Savings accounts generally have lower interest, but they're good for emergencies. So let's also get into the habit of investing in things such as stocks or shares of listed companies or unlisted listed stocks, property, bonds, and the likes. The benefit of investing is your money starts growing for you. And the money starts growing for you, then you start tapping into passive income, such as dividends and the likes that will help you achieve financial wealth. So start investing, start small, be consistent. And the third thing is manage and reduce your debt. Firstly, not all debt is bad debt. Not all debt is bad debt. You can use debt to acquire income-generating assets that will help improve your net worth calculation, or that will help you grow your business, your side hustle, your sources of income. So not all debt is bad debt. So be mindful of what type of debt are you getting. Are you getting debt to build and acquire assets, or are you getting debt to consume? So if you're taking debt to go on a holiday, is that a good or a bad decision? If you're taking debt to buy clothes, is that a good or bad decision? Those are the kind of questions you need to ask yourself. Analyze all your debts, and then, analyze all your debts, check where you are in terms of your interest rate that you are paying on the debt and any outstanding balances. And then choose a repayment strategy. Pay, for example, if you're highly indebted, you can pay debt with the lowest balance or use as a strategy, or you can pay debt with the highest interest, or you can consolidate your debt to pay off one installment. Depending on where you are, sit down with a financial planner, financial coach, or a debt counselor to help determine the best strategy for yourself. And then remember that not all debt is debt. Be disciplined about that. So I'll check the comments now. Just in closing, similar to what Bessie Sevi is offering, from a TKO consultancy point of view, we provide financial wellness programs. So we have financial wellness programs for employers or Stockfells or Chalmers in the northern, in the Kenyan concept. So we provide financial education workshops, webinars, pre-retirement sessions, and overall wellness programs. I also provide financial coaching programs on a one-on-one basis or on a group coaching perspective, online courses, which I'll be launching in 2022, where you can join my online courses and then tap into the different modules that we'll cover. in terms of what's coming soon from a TKO perspective and a TK perspective, is we have our financial journal that will be part of the hamper that's coming soon, very similar to Juliet's guide that will help you work through your finances. I am hoping that my book will be published in 2022. I'm just waiting for feedback from the editor. So there's a book that's coming up. It's going to be titled Let's Change the Script. And then from a TK Ntebe perspective, because I'm a lifestyle and a travel enthusiast, I'll be launching my champagne flutes. So if you are like Juliana, you love going out, I'll be launching my glasswares for my travel escapes and the likes. And then just in closing, before I open for Q&As and respond to the questions, I always say financial prosperity is our birthright. Our responsibility is to change our bad money habits and to improve our relationship with our money. So with that said, if there are any questions, and then I will open up for questions and comments, and then I will check what is said in the thingy. Okay, so what do you mean by automate savings? Okay, thanks, Juliet. Automated savings means you take it easy you make it easy for you to save without thinking about it. For example, putting a standing order, debit order from your salary to your savings account. Fantastic. Eunice, this is one that has been completed, or are you still making payment? Hi, Juliet, not completed. I took advantage of the C19 discounts and invested in 2 properties. One complete of the plan. Okay, great. So I don't know if there are any questions at this point in time. Become an asset when you complete making the payment. I agree with Juliet on that one. It will also depend on the kind of plan. Okay, so I'm assuming that Juliet and Eunice are discussing the different types of property if the plan is in construction and the different stages. Is that correct, Juliet?
TK, she was asking how to account for an off-plan real estate investment.
Okay, all right. Okay.
If you have any comments on that, you would add.
Okay, no, fantastic. I don't know if there are any other questions in that regard. So I think Eunice, Julia did respond to the question. So if it's off plan and you've taken a mortgage, it means that you still owe the bank. So technically the property is not yours, or the plan that you're going into is still not yours, because you still have an obligation to pay the bank on a month-to-month basis. It only becomes an asset the moment you've fully paid off that house and you own it.
Okay. Mm-hmm.
Is that cool?
Yeah, yes, it is. I think my concern was whenever I'm doing this debt service ratio, especially for this off-plan property, it's an investment. But right now it's just money is going out. But I appreciate that once it's complete, the value is going to be higher than what I am currently paying. It's just that I'm just trying to see, I don't see this debt service ratio, my ratio of 74 going down in the next, let's say 6 months or 1 year. And I'm just wondering, I should just be okay with that my change will happen once the asset actualizes. So I shouldn't beat myself too much that, yeah.
So I think I'll also take it back to the net worth calculation. So remember, the net worth calculation is your total assets minus your total liabilities, and then you get your net worth calculation. So for young people specifically, because now you're buying property, you are property for residential, property for investments and the likes, it means that there's going to be a lot of capital going out to acquire those assets. So it then means that your liabilities are going to increase with time, therefore affecting your net worth calculation. But the moment 10, 15 years down the line that you fully paid off that mortgage bond, or if you're into a commercial property or rental property, the moment it starts generating income for you, it then becomes an asset, and you'll see your net worth calculation become a lot more positive. So just because the other thing that's also very important when it comes to understanding your financial status is, now that you know that your debt service ratio is 74%, of that 74%, what forms the biggest part of your debt? You know, if it's your mortgage, then you know. But say, for example, you also have other repayments such as clothing accounts, such as your credit card, such as your personal loan, it then says maybe you can start thinking about paying off those other small debts just so that you free up and you ease up on your debt service rate or your repayment abilities such that you're able to fast track and pay off the mortgage bond, if you want to do that. I know, for example, in my case, in my individual case, is I see my mortgage as a vehicle for me to acquire different assets, but it also gives me anxiety because every time I look at that balance, I'm like, ooh, when am I ever going to pay this money back? So as a strategy, I've just slightly increased my monthly repayments with maybe 300 to 400 Rand month on month, because by so doing, it then reduces the number of years that I have to pay that off. So sometimes you just need to look at the different strategies to say that, how can I best position myself to achieve the financial goals that I want to achieve? So now the 74%, don't beat yourself up, but look at the numbers, have a strategy and work towards your individual strategy. I hope I've answered your question as comprehensively as possible.
Yes, you have. Thank you.
Thank you very much. I don't know if there are any other questions before we wrap up. So in the absence of the no questions or comments, is for me, I am, like I mentioned, I'm a travel blogger. I am a content creator. So if you want to connect with me, I'm available on all social media platforms, Instagram, Twitter, and LinkedIn. My handle is @TK_Ntebe. The second platforms that I'm available on is I have a YouTube channel called Escapes and Money Adventures with TK. I literally create content around personal finance, lifestyle, and travel. So next time I'm in Rwanda, Tanzania, Nairobi, I'll be taking travel blogs and blogs where I'll be sharing my experience. I have a podcast that's available on Google Podcast, Spotify, and Apple Podcast called Escapes and Money Adventures with TK. My email address and my website, which is launching very soon. And then from a TKO perspective, I also have TKO Consultancy that's on YouTube, Instagram, LinkedIn, Facebook, and Twitter. So you can follow the different sessions and then share, engage, and comment. My biggest call to action besides supporting these amazing things is my book, which is coming soon, my journal, which is also launching very soon, and my glassware. Please subscribe to my YouTube channel, Escapes with TK. I create amazing content on travel, lifestyle, and the money. And just like that, we are at the end of our session today. I don't know if there are any other comments, feedback that you guys will want to do. And with this said, Juliet will come back. I just want to say thank you so much, guys, for being with us today. I hope we have created value. I hope we've shaped and inspired you to have a better relationship with your money, but also to be the CFO of your own life, the CFO of your own life. This was a great pleasure, and we look forward to engaging with you from this moment onwards, whether you join our coaching sessions provided by Pesa Sevi or TK Consultancy. We look forward to engaging with you and helping you have a better relationship with your money. Juliet?
Wow, that was so awesome. Thank you so much, TK. It has been so great working with TK, preparing for this. I also want to give a quick shout out to the Mandela Washington Fellowship, also the US State Department. They're the ones who have made this workshop possible. As both TK and I were Mandela Washington Fellows, and we got the opportunity to collaborate on this because of the fellowship. Now, there are two things. One, as you close the Zoom, you might get a pop-up survey for you to give us feedback on the workshop. I love all the comments that you have given. I'm also going to open the WhatsApp group for a few minutes. We're going to close it today because it was mostly to communicate about the workshop. And I'm so sorry for anyone who felt some type of way about having us mute the group. We just wanted to make sure the communication there is limited to what we want to communicate, so that, you know, when you have so many people talking, a lot of information can be lost. So we're going to open it, and please give us feedback there. And I'm also going to post the link for the survey. Give us feedback for the workshop. We want to see how better we could do this in the next, whenever next we do it. And we'd also love to hear what you have to say about what you have learned also as well, so that we can do proper analysis and see the areas that people would need more help with as well. Thank you so much, giving all of your time for this whole morning to spend with us. We don't take it for granted. We really hope it's been impactful and useful, and that's not just information that you receive, but information that you go and take advantage of and actually have lifetime change. Also looking to engage with every one of you via social media. We'll post the links to the pages that you can follow on the group. And also, if you need us for professional services, you can also engage us. Thank you so much. Hilary, Masikane, all of you guys have been fantastic. Katrina, Eunice, Lenya, I'm trying to see all the names I can remember. Christian, thank you all for participating and engaging. We appreciate you so much. Also, oh yeah, don't forget to send us photos if you want to win the coaching sessions and the hampers that we have. Send us photos. We've gotten a couple already and they're so good. They're so fantastic. Thank you for sharing. Send us more, you can still enter. Yeah, yes, TK.
I was about to say, when you saw me smiling, I actually have my photographer in the background. So I was smiling for a picture. So this is how serious I am about my winning this competition. So if you have not shared your pictures, please do so and be serious about it, you know. And again, thank you so much again to the Mandela Washington Fellowship. I just wanted to add on to what Juliet said is Juliet went to the fellowship in Chicago in 2018. I went into 2019. Juliet and I have never really met in person. It's just been a virtual, and I feel like she is family. So if you are young and you're doing amazing things, do apply for the Mandela Washington Fellowship Program, whether it's the Regional Young African Leaders Initiative or the Mandela Washington Fellowship. It's an amazing program that connects you to a network, resources, opportunities across the African continent and across the globe. So be on the lookout for that and follow the different social media pages and take your shot. You never know. You never know. I'm about to fly to Nairobi very soon to meet Juliet in person officially. So it's a great platform. It's a great program. And thank you so much for all the engagement today. It has been amazing. Send through those pictures. Thanks, Juliet.
All right. Bye, guys. Don't forget to take the survey and follow through with some of the feedback we need. Have a great weekend and afternoon ahead. Progress. Bye. So I'm gonna end the meeting for all. Okay. Yeah. Then.